Hey everyone, as you probably know, myself, Brandon, and Tom are currently in the United States following the Berkshire Hathaway annual meeting, and in between the content that we're creating and posting from the United States, I've also got some scheduled content here, and this is one of those videos, and today it's going to be a clip from the Young Investors Podcast, episode 172, and in this clip we talk about where cash matters in an investment and a stock, and discussing stock screeners, whether we use them, which ones, and everything in relation to that. So I hope you guys get some value out of today's video, and as I've mentioned, if you want to be following the content that we're creating in the United States, then make sure you're subscribed to all three of our YouTube channels. Everything is linked down in the description below, and if you want to see the day-to-day and behind the scenes, you can follow me over on Instagram, again linked down in the description below. With that said, hope you guys enjoyed today's clip.
So how much time do you spend looking at cash per share? I'm holding a lot of airline companies that are pretty suppressed right now, but they're still holding a lot of cash relative to the share price. So how do you kind of think about cash in the valuation process, cash per share, cash versus market cap?
Yeah, that's interesting. So cash relative to, I think of cash in two ways. One is when I'm looking at the financial health of the business. So, and I'm not looking at cash in isolation, but I'm thinking about cash and the other short-term assets they have in relation to liability. So that's kind of the first way I'm thinking about, well, how much cash do they have to cover these obligations that are coming up? But more importantly, I guess, well, not more importantly, but probably more to the question is in terms of valuation. I think of, and I've probably said this analogy quite a few times, but I think of cash on the balance sheet as if you were buying a house and there's a chest of money buried in the backyard, right? If you're buying a house and you're willing to pay $100,000, but you know that there's $20,000 buried in the backyard, you're now willing to pay up to $20,000 more for that property, because as soon as you buy it, you can go into the backyard, dig it up, and get your cash back. It's like the cash on the balance sheet is a discount to what the value of the cost of the property is to you. So that's the way I think about it. I think of cash as an immediate cash flow that happens at day one. So I will subtract it from the price, or add it to the price I'm willing to pay for the stock, or subtract it from the valuation, and then do the opposite in terms of debt. So debt is kind of an immediate cost I think of. So that's the adjustment I do. And what that's called is you're adjusting the market cap, which is essentially the price you need to pay for the stock, right? You're adjusting the market cap by cash and debt, and you get to enterprise value. So you can compare the valuation you have to enterprise value, or you can make the adjustment on the valuation and then compare it to market caps. That's what I do with the cash.
Nice. Yep. I'm the same. Yeah. Just factor it into your valuation. I always think about valuation as if I'm buying the whole company. So it makes it quite easy. I don't actually look at like cash per share, because I'm thinking about valuing the whole company. So I'll just figure out what market cap I would like to buy it for, and then factor in the cash off the market cap.
Yeah. Okay. I'll ask this one to you. I haven't seen Phil Towns' name come up in a while. It's been a little while.
Phil. He's gone off the radar a little bit. Good old
Has he?
Phil.
Yeah, that's probably why. Yeah.
I think he's still making content, but I don't think maybe he's not super focused on it anymore.
Right.
I don't think his videos really take off like what they used to. I don't know, but anyway.
Yeah. Anyway, the question is, hi, Brandon and Hamish. Not related to this episode, but have you come across anyone else who has a toolbox similar to Phil Towns? Hamish, your spreadsheet is awesome to use. Oh, thank you very much. But when I want to quickly look at a company, I use Phil Towns' toolbox, but his only does US companies. Really appreciate the great work you both do. I presume you're probably Australian. Given the way you phrase that. So what do you think?
Yeah. I don't know. I don't think I've come across another for those that know and have read Rule 1, the toolbox is essentially just like a bit of software that must just scan all the US based companies and kind of nicely puts it into a table of all the things that you need to know from his Rule 1 approach, like the EPS growth and equity growth and all that stuff, and return on invested capital, and it just puts it into a table. I haven't found anything else that's similar to this. I think probably the closest thing I would do is just go to QuickFS. Because QuickFS, they have 10 years worth of numbers, and they'll tell you like what the return on invested capital average has been over time, and and what the EPS growth and the equity growth, revenue growth, free cash flow growth, it will tell you what those numbers are.
Yeah.
But no, I haven't found like a bit of software that's like fills in all the gaps. I find that it's a bit of a scouting exercise.
Yeah. Yeah. No, I haven't. I haven't really found anything else either. I'm not a huge fan of using scanners or screeners. To be honest, I prefer.
I don't know if I can trust them half the time.
No, and I mean, you're going to miss businesses where there's maybe an abnormal number and there's a good reason why that number.
True, yeah.
I mean, earnings per share might be negative in 1 year, and this happened to Facebook, for example, because they had to pay a $5 billion fine or something like that, right? Or earnings per share is much lower than it was previous years, but you might just take that fine as a one-off. You might not, but maybe you do. And if you do, then you want to add it back to earnings. So then the screener would miss that. The screener's not doing that adjustment. So I just much prefer to think about the areas that I understand and just look for great businesses in those areas. And if you're screening companies, what I've fallen into the trap of doing as well is you find businesses that look cheap on a number basis, but you don't understand the industry. You know that you don't understand the industry or have any hope of understanding it, but you kind of want to because then the broad numbers say it should be cheap. I'm sure a lot of people are probably doing this with Alibaba, for example, where everyone's saying it's cheap. Maybe you don't understand the business, but you kind of trick yourself into thinking I can understand this kind of business. And that's what you want to avoid. And I think screeners can do that a little bit to you. It can bias you towards companies that you don't understand and that you shouldn't form an opinion for or against. But no, I haven't really found anything good like Phil Town's Toolbox or anything similar at all like that, really. Yeah, no.
Yeah. Should we do one more?
Yeah, where have we got?
This one's addressed to you.
Okay.
I don't know if we've done this one already.
Yeah. Yeah.
Did we do that
I'm
one?
not sure. I'll give a brief answer on it, but yeah.
Okay. So the question is, hey guys, thanks for the great podcast. Been a keen listener for over 2 years now. Thanks very much for tuning in. My question is to Hamish. How are you thinking about ASOS? Has your thinking changed since you made the investment?
Yeah. So I think. Yeah, so the brief story behind this is I started looking at it because Nick Sleep is invested, or at least he has at some point invested in ASOS. So I invested I looked into the company and I found it really compelling from a management perspective, from an economic perspective, from a valuation perspective as well. And then I think I invested a little bit of money, not much. It was a very toe-dipping investment. And then I think 2 days later, the CEO stepped down. I have this I have this terrible track record of investing in companies. And then the CEO who I really like either steps down or passes away or
dies.
Yeah, I mean, it's
bad omen.
So look out, Reed Hastings. the CEO of
you got a target on your
CEO
back.
of Netflix.
Oh my god!
Yeah, he's got about a couple weeks to live, according to my track record. No, but I can't even remember where I was going with this. Yeah, so that changed the story for. Sorry, Brandon.
Sorry, I've lost it. The CEO of my company's either steps down or dies. It's unfortunately true.
It's happened
anyway.
3 times out of I think 4 or 5 investments. So it's a pretty high strike rate. So that obviously changed the story around ASOS. I like to see a big track record from the CEO. So I like to invest in companies where the CEO has been in place for 5+ years usually. And obviously that's not the case if the CEO just stepped down. So I'm waiting to see the new CEO. We still don't have one. I think we're supposed to get the announcement over the next month or so. Although I think I said that last month and it still didn't come out. So we'll see what happens. But I want to see who the new CEO is. Did they work at a previous public company? Can I look at their track record there? And that will give me, then I'll make a decision about whether I still like management team. But that's where I see, it's up in the air. I'm not adding to it, even though it's really, really cheap if the management team is great. But I'm not adding to it.
It's a